Not one, but two of the world's largest central banks just resumed cutting rates. A little lower in the pecking order, my home country of Canada has again gone back to cutting interest rates after doing so aggressively earlier in the year. And now the US has joined the rest of the world. But that's not all. Fed Chair Jerome Powell not only signaled the return of cuts, he also laid out the game plan for the rest of the year. Now, the interesting thing here is that inflation in the US is still running hot at 2.9%. So, are they cutting because they want to or because they have to? Now, the moment the news broke, gold rocketed to brand new all time highs before reversing course and actually ending down on the day. So, the question now, will Bitcoin be following gold's recent upward trend, or are we going to crab walk sideways a little bit longer? We're going to find out. We're going to chat a little bit about this today. To make sense of it all, to help us here, of course, we've got the incredible James Lavish. He's co-founder of the Bitcoin Opportunity Fund, and he'll share his takes on this pivotal moment for markets and for Bitcoin. He'll also be joined by, of course, Brandon Gentile. He's the host of his own podcast here on YouTube. He's had incredible guests, including James Lavish just recently, and I highly recommend you go check him out and give him a subscribe. And possibly we may be joined by, of course, the wonderful Gary Leland of BitBlock Boom. More on that in a minute. But this is going to be a hell of a show. Stick around. You're not going to want to miss it. Drop a like. And without further ado, I'm Ben with the BTC Sessions. This is your bullish session. All right, I want to welcome to the stage Mr. James Lavish and Mr. Brandon Gentile. Gentlemen, how you doing?
Very good. Very good. Great to see you guys.
I'm on mute. No, all good. How are you, man?
I'm good. I'm good. Don't worry. I'll shoot over a tutorial on how to work the mute button.
Okay. Yeah, this is only like my 940th podcast.
That's all good. That's all good. Well, I want to kind of, James, toss it to you a little bit. Just I want to get your thoughts on what is going down in regards to the Fed. So, of course, Jerome Powell chatting today, cutting rates, 25 basis points, but he gave some forward guidance as well. What did he have to say, and what's your interpretation?
Yeah, so I mean, the market came in expecting, if you look at Fed funds futures, market came in expecting a rate cut of 25 basis points today. There were a few outliers who thought maybe they would cut 50 basis points, but I didn't. I mean, I thought that was a very low probability, and it ended up being non-existent. So they did not cut 50 basis points. They cut 25, and so that's what the market expected. So what everybody was hanging on, though, is the words coming out of Powell's mouth, and just was he going to lean a little bit dovish? Is he going to lean a little bit hawkish? Like what's he focused on? And so when he started talking, he was talking about pricing pressures and the dual mandate and making sure they keep inflation in check. And you see the market kind of sold off right away. And then as he kept talking and started answering questions, the market realized that he's focused on unemployment, and for good reason. I mean, we had the jobs numbers have been rolling over, the unemployment number is ticking up, in reality, the job market is definitely softening here. There are fewer job openings. They're in the job participation rate is ticked up, and people are not finding jobs. So that's concerning to them. And so what basically he's saying is that they're turning their attention to the unemployment numbers and the unemployment or the jobs aspect of it, because the Fed has two mandates, a dual mandate. And Brandon, just feel free to interrupt me at any moment. But the dual mandate is stable pricing, which is supposedly 2% inflation, and full employment, which is there's no measure for full employment. It's just how does it feel, But he's turned his attention to the employment side, and this tells us two things: it tells us, number one, that they're concerned about 900,000 jobs being revised out of the numbers over the last year going through March. And he addressed it directly, stuff I've talked about before, which is the birth-death model, which is the BLS has a problem. They do these surveys that are lagging, and they're problematic because they don't get everybody to respond to them. They get like 40-something% of respondents now, which tells you that the only ones who are responding are the ones who are doing well. Everybody else is in either ignore or survival mode. And so you're not getting accurate data, number one. And number two, you go back and revise these things and revise them over and over again, and you realize that this birth-death model, which is not birth death of people, it's birth and death of companies, it's completely out of whack. They're using assumptions that just don't work anymore. And they're using assumptions that were prior, a model that came prior to the pandemic. It just doesn't apply anymore. So they're completely off the reservation there. And he addressed it directly in the press conference today. And he said the birth-death model obviously has its issues. So what he's telling us is that they're concerned about the employment side of the equation, and they're comfortable with the fact that they haven't hit that 2% inflation rate. And that's telling us that they're comfortable with it being well above 2%, close to the 3%. In some measures over with your core stripping out other goods, So that means that he's worried about the big bad word that I lived through. You two are too young to remember it, but I lived through it in the 70s and early 80s. It's something called stagflation. It's absolutely, utterly horrific for the economy when you have the economy slowing down and prices continue to go up. It's extremely painful for anyone who's in the middle class or lower, and that's what he's concerned about. So, but he thinks that the pricing pressures are kind of under control. He's comfortable with the inflation being around this rate, and he's more concerned with making sure the jobs numbers don't get worse. And there's good reason for that. And I can share a chart with you guys and just show like why it's so concerning for him.
Yeah. Share it over and I'll bring it up.
Yeah. So, but just bringing up, let me bring up this right here and see if we can show this.
There we go.
Yeah. So these are prior releases of inflation. You can see inflation just kind of bottomed out. It's rising again. It bottomed out. It's rising again. And then you've got your jobs numbers are kind of rolling over. Unemployment's ticking up. But this is what he's worried about here. When you get into a period of recession, this is the unemployment rate. You can just see how it spikes up. It completely spikes up, and it could happen so fast. And they often miss it. They're too late. And this is the white line is the Fed funds rate. The blue line is the unemployment rate, and these red shaded areas are recessions. And you can see how quickly it happens. It spikes up so rapidly that they're behind the ball. This is COVID, so it's kind of unfair, but that's what they're concerned about. They don't want that to happen again. And so it's up to the middle class and the lower class to suffer the weight of inflation, so that the economy doesn't go into the tank completely. Sorry, but if you don't own assets, you're gonna be hurt, and that's kind of the message here.
Yeah. Now, I do want to. I'll posit this to both of you, but maybe I'll get some input here from Brandon. Where do you feel the Fed's credibility is standing now? They've finally kind of capitulated after being, there's actually some bipartisan agreement, like it's time to cut rates over and over and over again. The rest of the world has been doing it for some time now. And of course they've just got a barrage of the whole Trump admin just berating them and trying to destroy credibility there. Where do they stand? What does you know, what are we looking at here?
Yeah, I mean, it's funny. I don't know if it was, and this is above my pay grade. This is maybe throwing it back to James almost, but I think it was Jack Muller's the other day was kind of talking about this and the game of, there's different ways to devalue your currency, but also devalue the treasuries and get people to buy them and things of that nature, right? You're kind of arbitraging the system, and one of these ways is really what we're doing with the system now. And like you said, they're cutting rates around the world, but we haven't, right? So it's like, it's the 3D chess, 4D chess that people, the financiers are playing, that it's hard for the average guy to see. And I think that without going into the weeds, because it's, most of us are 8 IQ plebs, financial repression is the game, right? Everything James just laid out, we have to get good at reading between those lines. And I think the Fed is, it's 112 years old. It's, as we all know, it's past its expiry date. And it's just, we're at the end game. We obviously can see civil unrest. We've been seeing it for years, really, right? And clearly it's getting, there's more and more and more. James is famous for talking about the debt spiral or the death doom loop, and that's what we've entered. We started maybe in 2008. I know Larry talks about that all the time. Many people talking about starting in 08, and they're just trying to paper it together somehow. And so again, the credibility is just, really been falling apart for decades. But now I liken it to like if anyone's watched a drain before, or you had like the quarter, the penny that you put in the little thing at the arcade or the science museum, and it's like starts out really slow, and then like when it gets to the drain, obviously it speeds up and it just starts going crazy. Well, that's where we're at. We're like maybe we're in the middle somewhere. Maybe we're getting close to that center point where it's starting to speed up. And James, we had him on the show the other day. We just talked about this, and it was we had 4 or 5 trillion printed last time in during the COVID, and it could be 10, 15, 20 trillion. Maybe that's the starting point next time. We have something, the pin that pops the bubble, and they have to paper over these things because you have this economy that's running on just vaporware. So it's, like we just talked about the revisions of the jobs, like this is insanity. I mean, it's political money or currency for the political world that we live in. And it's just hot air. So as James said, own assets. All the roads lead to Bitcoin. The hardest asset is Bitcoin. Therefore you need to own Bitcoin.
Yeah. I mean, the Fed's credibility is kind of shot here. Why is it shot? You heard him say, and I think I heard him say 3 or 4 times, the Fed is working for the American people to make sure that it's taking care of the American people. And it's absolute, utter horseshit. They know that they have manipulated the system psychotically, and it's hurt people in a way that is really actually pretty easy to identify. And the separation of wealth in this country has been dramatic since they started printing money. They threatened to do it back in 1987, or Greenspan. You guys, again, this is Black Monday, where the market crashed on a Monday. And Greenspan came in and said, "We got your back." It shored up the market without them having to print anything, really. And then in 1998, when long-term capital management collapsed, they engineered a bailout for them through Goldman Sachs. So they didn't print again, but they basically said, we're here to protect Wall Street. We're here to protect the market. And then in 2008, they had no choice. They had to print because otherwise they were just going to allow the entire financial system to collapse. And so, but they created this, and they've created the system of, the financial markets relying on the Fed to backstop them and take on more leverage. So we just continue to do it. And then by the time we got to 2020, it's ballooned out of control. So they're not protecting the American people. And, if you pull my screen back up, Ben, this is it's a pretty simple equation. And if you can see here, let me actually make that bigger, huh? Is that better? You can see here, it's very difficult to see, but this blue line down here, this is the amount of wealth that's shared between the bottom 50% demographic. And this is what it's done. Yeah, it's doubled since 2020. Yippee. Look at what the top 10% wealth has done since the Fed started printing money, really started printing money here in 2008 and 2010. It has just gone up and parabolic here. Okay. And so that's the issue. The separation of wealth has just been dramatic. And that's why you're hearing people frustrated and they're struggling. And then Powell today, he lies. He says the American consumer is doing great. Yeah. Well, that's if you take it holistically, which is this 10% driving the economy and the stock market driving the economy. These guys are not doing so well. And the reason that they're not doing so well is because the share of income it takes, the percentage of their income it takes to sorry, I'm pointing at the wrong screen here. This demographic is not doing well. You know, these guys doing great, gone parabolic. You know, this, yeah, doubled, but the share of income it takes for them to buy the necessary goods, the food, groceries, the gasoline, you know, their rent, they can't buy houses. These people are struggling. So the lower demographic is not doing that great. And you can tell because credit card usage is through the roof. It's at all-time highs, obviously. Well, there's more money in the system. So of course, dollar-wise, but then you look at delinquencies, 90-day delinquencies on credit cards. And today they're actually, as of July, they were at 12.3% delinquencies, 90 days. The highest they ever got in the great financial crisis was 13.1%. So tell me how well everybody's doing. It's nonsense. So they just manipulate numbers or the data to make themselves look good. They're not doing that great. We have a major problem. Our problem is the stock market keeps going up and it's driving the economy. These guys are not doing that great. Prices are still rising. Yeah, tariffs have had an impact, and we don't know how much of an impact or echo of that we're going to have, but it's continuing. But you can't let this pop. If you let this demographic, what you do is if you drive the stock market down by removing liquidity by QT or driving up interest rates or keeping your interest rates way high, that pops this part of the economy, which is basically all of it. And we fall into recession, which goes back to this chart. And that's not okay. That's not acceptable. And so that's the problem here. And that's the problem they're facing. They don't want to face that. They don't want to have, you know, another spike of unemployment like this, because that will require them to do exactly what Brandon just said, print 10 trillion, 12 trillion, 15 trillion, who knows?
How do they continue to gaslight like this? Again, the attitude of everything's, you know, how long can this possibly go on where they say the average American consumer is doing fine when in reality it's the people owning the assets? Everybody knows and feels like I go to the grocery store, I can't put healthy food on the table anymore. I'm cutting here, there, and everywhere. No more vacations. And the younger generation is like, I'm never going to own a home or retire.
Well, it's easier to do. This is what they don't want is a revolt where prices start spiking again. And it's easy to do when people are just getting clipped for 2-3%. You don't really, you know, it's the boiling frog thing, right? But, you know, you've lost 25% of your purchasing power since 2020. And people feel that. And they would rather have easy liquidity, lower interest rates, because for them, lower interest rates helps lower the credit card rates. It helps lower the mortgage rates, you know. It makes it a little bit easier for them. But and as long as it just doesn't start driving up inflation, it's better. And they know that. And so that's what they're trying to do. They're trying to make sure that they keep the economy out of recession, because they have to print again, it's going to be twice as bad. So yeah, they're in a tough spot. And what's so frustrating about it is they know damn well that they're the ones behind it, manipulating the money and causing this separation of wealth. And that's just reality.
The one thing I'm going to say really quick too, this is what's really wild is I'm reading a book right now. It's called You Are the Mountain. I forget what it's called. I think I have it right here. Actually. The Mountain Is You. And again, it's about, you know, taking personal trauma out of your life in essence and just becoming a better person, right? Jim Rohn, Bob Proctor, the personal development people of the world. And after 15, 20 years of just studying money and myself, a lot of this is just mental, right? Like you could give a lot of people Bitcoin, or you could do a lot of these things, but until someone's like ready to understand it, it's like giving someone who doesn't understand money at all, how to budget and how to take care of things, they're going to go to the casino and blow it anyway. Like a lot of this is just such a mental game. The numbers are numbers, and this, I mean, you look at like Bitcoin is objectively better than everything else out there, bar none. But why after 16 years, and again, that's a short amount of time, we have a lot of adoption in 16 years, so I don't want to discount that, but why with social media, the world is its oyster? Like how is it not all 8 billion people on Bitcoin yet? Well, the pain to change, it has to be less than what you're doing now. And like James just said, like if you're it's like 1%, 2% frog in the boiling pot, people are like, whatever. Like it's okay. It's not a big deal. And I think the other big thing that we discount, Bitcoiners, a lot of us, is the social impact. Like this printing will continue going on until it absolutely implodes on itself, because the social impact, you look at like the Great Depression, a lot of people didn't even know what the hell was going on. Like you didn't know like what your neighbors on your own street, maybe you knew what was going on, right? But you didn't know what was going on in the world. So like the keeping up with the Jones aspect is amplified to a degree that we have never in human history seen before. So whether it's student loans or someone buying something in the grocery store and you can't afford it, you have this like aura of like, I can't be shown or I can't be seen as lesser than. And so you're going to have this world where the social impact is greater and the emotional charge is greater than like the actual logic of what's happening. So they will, not only will they have to print as James just outlined, just monetarily, but the social impact, I think, is far amplified or exponentially greater than anything else we could ever imagine. And like you just look at like how the exception is the rule in society today, where like a 0.1% of society, we govern off of that basis. So if this group is hurting or that group's hurting, we just take everything and say, okay, throw it at that person or throw it at that group. Well, what's the next group that's going to hurt? If it's 20% of society or 30 or 40% of society, that's going to continue expanding to going back to this whole thing of it's going to be 10, 15, 20 trillion next time. Maybe it's 30 trillion. It's going to be 50 trillion eventually. They're going to have to. So this drain keeps getting faster and faster and faster until it just flies apart at some point. And I don't know when that is. I was trying to ask James the other day, right? None of us know. I mean, that's the part we don't know when this absolutely flies apart. But I will say the social impact, I think, is the thing that no one talks about really. And it cannot go down for that fact alone. They will print it into oblivion because socially we are so connected that you can't be seen as, oh, I'm losing in life, right? The Instagram culture and this and that. I'm showing how great my life is. I mean, can you imagine if 10% or 20 or 30% or 40% of society is all of a sudden losing everything? It won't happen. They'll just print it into oblivion and it'll blow apart.
In the context of what you're saying around, they're going to need 10, 15, 20 trillion. I mean, it is crazy looking back and thinking that during the great financial crisis, the mind-blowing numbers that were being printed then were in the hundreds of billions. If I heard that number today, you'd laugh at it. I don't blink. Now when I see multiple trillions, like when they announced, the deficit is going to be an additional 5 trillion, it was kind of like, well, I mean, yeah, you're clearly blowing a ton of money, but I don't think I would really blink until I saw like a double-digit trillion at this point, because you become desensitized to it.
Yeah. I mean, you're totally desensitized to it. We have this year alone, we had the Doge Commission that was supposed to be cutting costs, getting us to a budget, wiping out the budget deficit, and getting us to a surplus. That was the goal, the aim. I mean, you guys, we have added $1.4 trillion to the debt since January. $1.4 trillion. Just think about that for a second. Okay. So we had a budget agreement and took off the debt limit, and boom, went right back up to 30. Now we're at $37.5 trillion. Okay. So who cares? Well, it just means that they have to manage this by having greater GDP nominally, meaning they have to have more liquidity, more money in the system to tax more to keep up with this, because the interest payments alone on this are over $1 trillion a year now. Okay, so that's bigger than every other line item but Social Security. So they can't have, they literally cannot have a market collapse or an economic collapse without knowing they're going to print massive amounts of money. Why? It's simple. You take in $5 trillion of taxes. Okay. You're spending $7 trillion. And the vast majority of that is mandatory expenses. You could take, $900 billion off the deck if you cut every single discretionary program, but they're not going to do that. So you've got a $2 trillion deficit. What do you think it happens if Powell drives this thing into the gutter? If he drives the economy into a recession? Well, you have somewhere around, a 10 or 12% rise in your mandatory expenses because of social security, the social expenses like unemployment and all that stuff. And then you've got a drop of 10 or 12% in your income side of things because of taxes going down, and there's less GDP, lower GDP, so you're talking about at best 10% on each side, which is another $700 billion of spending, and then you're losing $500 billion or $500 billion, $700 billion, $500 billion of income you're taking out because of the loss of income. I mean, you're talking about adding another $1 to $2 trillion on top of the current $2 trillion deficit. It just gets out of control. And that's if we have just a normal recession. If we have a massive one, those numbers could be like $4 or $5 trillion of budget deficit. I mean, they can't have it. And so that's why you're seeing them act like this. They're like, yeah, we've got stagflation, but I mean, reality, by lowering the interest rates, allowing the economy to continue to run and avoiding that downturn. Yeah, we may have higher inflation, but that helps our debt. Yeah, it may hurt the middle and lower class a little bit, but it helps our debt. I mean, that's just reality. So it's a better outcome for them to keep that fire hose going.
Now, I have some, I want to get some thoughts from you guys in regards to this year, the kind of the movements in gold versus the movements in Bitcoin. And so I'm going to get to that in a moment. We're going to do just a quick little break, a little sponsor shout out here, and then we're going to dive back in. But I will say, everybody that's joining us here live, thank you for being here. If you're brand new to the channel, welcome. If you're returning, welcome back. And make sure you drop a like on the video. We're going to say a quick shout out to sponsors of the show, and then we'll be right back. And I'm really curious to get your guys' take on what happened with gold today, but also what's been going on through the course of the year, and the typical movements of Bitcoin versus gold, what we've seen historically versus what we've been seeing as of late. So we'll examine that in just a moment. We'll be right back. See you in a sec. Bitcoin Well is the best place to be buying and selling Bitcoin in Canada and the US. And now with Bitcoin Well Infinite, it's also the best place to be making large buys at their OTC desk of over $50,000. Their white glove service gives you fast transactions, no slippage, and the lowest fees. You can scan the QR code on the screen or simply head to bitcoinwell.com/BTCSessions to sign up today. And you can share your own personalized referral link to earn commissions.
If you've been around Bitcoin for more than a minute, you've definitely seen something made by Crypto Cloaks. Since 2017, they've been the go-to for badass 3D printed Bitcoin gear, from custom home mining rigs to sleek hardware wallet mounts that make your setup look pro. I've been stacking Cloaks gear for years, and most recently I grabbed their Gamma case for my miner. Let me tell you, it turns some heads. You can customize everything, and of course, the legendary Bitcoin grenade, yeah, that's them. Hit the link in the show notes or scan the QR code to visit CryptoCloaks.com and stack your own custom Cloaks gear today.
DEBIFI is the best and easiest way to borrow against your Bitcoin in a non-custodial way. Funds are held in a multisig escrow where you hold a key, and the platform allows for excellent hardware like the Cold Card Mark IV and the Q. You have access to flexible conditions, the best rates, and institutional grade liquidity. If you're looking to make use of your capital, don't sell your Bitcoin, borrow against it. You can head over to DEBIFI.com to check them out, or simply scan the QR code on the screen. All right, we're back in. And gentlemen, I said I wanted to talk to you a little bit about how gold's been behaving this year. We've seen it doing very well, regular new all-time highs. Very interesting today watching during the Fed's announcement here. But we saw a spike to brand new all-time highs, and then it's actually it is now up on the day, but it was down on the day for a good chunk there. So that's been very interesting. Bitcoin also was kind of all over the map. Like it kind of took a dump earlier and went into the 114s. It's right back up in the mid 116s. But we've kind of seen Bitcoin lagging gold a little bit. It hasn't been doing its thing yet, where gold will have a price explosion, and then Bitcoin will do its thing and kind of follow up with an equally, if not more, violent move. And I guess my question is, should we expect that coming down the line, or is this kind of an indication that right now we're skirting between people that understand what it truly is, which is, again, something that allows you to store the fruits of your labor way into the future and secure them, a new age gold for the new generation. Is it between the people that understand that and the people that are still thinking of it like a tech stock? Is there a push and pull, thus the crab walk that we've seen the last few months, or is there something else going on here? I'll let either of you dive in.
Yeah,
James,
I mean, look, gold has been on a tear, right? So if you just look at gold over the past number of months, I shared another chart here for you. It's been on an absolute tear. What's going on here? Well, you've got a lot of central banks that are buying gold right now. They're buying gold in massive quantities. And they're doing that because they're not trusting U.S. Treasury quite as much anymore as a reserve asset. And they want to hold gold to protect them against fiat inflation everywhere. That's just reality. And secondly, you've got a lot of people who are buying gold just as protection against uncertainty. You've got this market that we don't know what's happening with it. We don't know where it's going. We don't know if we're going to have a turnover in the economy or not. You've got a lot of global unrest, as we know, that has not really, it's not spilled over into a world war, but we've got proxy wars everywhere. And so there's just unrest. And then, of course, gold is also sniffing out the fact that the Fed's pivoting here. It's going to pivot. It has to pivot, and they're going to have to move back toward more liquidity. And gold usually takes off in those cases. So the question is, why has Bitcoin not kept up? Well, it's exactly what you said. If we go to this chart, you see Bitcoin usually does when gold has a rip, Bitcoin will follow. And it's done that consistently. This is not a long enough chart to really see enough of it, but you can see here that gold has taken off and Bitcoin has not followed, like you're saying. It has not followed yet, but it's going to. And the issues, like you said, in my opinion, is that Bitcoin's still trading like a risk-on asset. That's just reality. It's on your day-to-day, it trades like a risk-on asset. It doesn't have perfect correlation to the NASDAQ or the S&P anymore. It's pulled away from that correlation, but by and large, it leads the way, and you see it sell off on weekends right before the market sells off. It's something that institutional investors can trade over the weekend, so they'll use it. They'll use it to make sure that they get ahead of margin calls. But the issue here is that you've got uncertainty that kind of hurts markets, hurts Bitcoin in that Bitcoin's been grinding sideways here. But in the end, We all know what's going to happen. The Fed's going to expand liquidity and it's going to catch up. It's going to scream past gold. That's what I fully expect. That's, I expect for Bitcoin to be up in this range at some point later this year, way past where gold is. So, gold's had that tremendous run. It's just kind of taking a little breather here. But again, because we had tempered comments out of Powell at the beginning of the press conference, you saw gold sell off. It just tanked. And that's, no surprise. It tanked. And then when he said, "Oh, we're it sounded a little bit more dovish," it kind of stabilized, and now it's moved up. But that's generally how I'm seeing it. And maybe Brandon has a different view on it, but that's generally how I'm seeing it right now.
Yeah, I mean, I agree with everything James said. I mean, I think that it's, and we talked about this the other day on our show. It's how many people own gold across the world, the central banks owning it. And you would think that Bitcoin would run more just because it's, 1/10 of the size and market cap of gold. But at the same time, it's something that Bitcoin is newer, it's just, again, it's kind of in the theme of the show a little bit. Like Bitcoin, it's 16 years, it's spread. I mean, it took gold hundreds and 1,000 years to become money across the world because we didn't have ways to communicate. Now Bitcoin has done what it's done in only 16 years. At the same time, again, it is that asset, like James just said, it's trading as risk on asset, something that people are, for lack of a better phrase, it's volatile to them. They're a little bit more scared of it. It's newer, to put it in layman's terms. So to me, it's the demographic cliff is huge. Harry Dent's been writing about this for 15 years. And that to me is really the changing of the guard. It's the silent generation and the boomer generation really sunsetting and going away. That to me is where everything kind of lies. The devil in the details is the next 10 to 20 years. We're going to have big gold movements because that's where the games are being played right now. Whether it's BRICS or, whatever is going on with different assets moving around the world and geopolitical, risk games, the actual game of risk, and the countries moving things around geopolitically. That is the game right now, whether we like it or not, whether Bitcoiners like it or not. That's the game, and we have to be pragmatic about that. I think Bitcoiners, a lot of us are very idealistic. We're forward thinkers. We tend to be entrepreneurial, so we are bringing the world into the future. But sometimes it's hard for us to be pragmatic and see the world for what it is right this second, and the nature of what life is, and the networks that are already built and already established, the good old boys clubs that are already established, a trillion of them all around the world. Well, those things are hard to break. When you mix that with the demographics, they all kind of go together. It takes time. So, old habits die hard. Yeah.
There's something else that, Ben, that we haven't talked about is that the Fed has been hinting at a third mandate. A third mandate would be to make sure that the long-term rates are kept under control, and remember, the Fed controls the short end of the curve. They control Fed funds rate, and and that in turn helps control up to about the 2-year-ish. They do not control the 5-year, the 7-year, the 10-year, the 20-year, the 30-year. They don't control those rates, especially the 10-year. And so the only way they can control those is with yield curve control, with QE, with going into the market, stepping into the market, and buying bonds to keep rates low. And gold is kind of sniffing out that that's what they're headed towards. In my opinion, it's sniffing out that they're headed towards making sure they use yield curve control, because everything we talked about earlier in the show, they must allow for high perpetual inflation. It can't be 0% inflation. It's got to be 2, 3, 4%. They'll admit to 2.5%, 3%, but there are pockets of inflationary pressures that are just ignored clearly. And so you can't tell me, with my auto insurance company wanting to double my rates this year with a perfect driving record and not even a speeding ticket with the last 5 years, they want to double it. It's just ludicrous, So, and it's all over the place with insurance and rent and all that. But one of the things that is going on is that you've got whispers from Fed officials that they know that they can't let the long end get out of control. What does that mean? That's a third mandate, which means that it's a silent mandate, but they're going to exercise QE to keep the long end of the curve down, which allows for long-term inflation. Because if they are fighting the bond vigilantes who are saying, no, we need to be compensated for the risk of these rates going high, of inflation going higher, and my bonds giving me a yield that's negative, then I'm going to let them.
Can you actually dive into that a little bit for those unfamiliar? Can you, I guess, explain a little bit in regards to the dynamic of, the overnight rate and shorter, shorter duration versus the long duration, and the risk and reward? Like when somebody looks at a 30-year and they say, I'm going to get X amount, but they're looking at the inflation rate and the real inflation rate. What is the dynamic? What is the thinking there? And what is the consequence of them not being able to sell long duration bonds to people because they don't see value? So sorry, that's a lot there, but
no, that's a great question. So basically the way you look at it is that if you plot the yields on a curve, right, you say that the Fed funds rate starts here, and then you got a 3-month, a 6-month, a 1 year, a 2 year. The curve should look like this, right? It should go up and to the right, and you should be compensated in a normal, healthy economy. That's what it should look like, because you're going to be compensated on the long end of the curve for risk of holding that bond and there being inflation in the future, or a much larger issuance of those bonds because of deficits and the government having to just flood the market with these bonds. So, that's just pure supply and demand. If there's more supply, it overshoots the demand, and then you've got people demand a higher rate for that. They want to be compensated more for holding this bond. That's normal, right? Well, in a situation like today, and the Fed only controls this little dot down here, which is the Fed funds overnight rate. And everything is kind of keyed off of that at the short end of the curve. Bank rates, money market rates, what you're getting in your Fidelity or your Schwab account for cash, that's keyed off of this rate. But what's not keyed off of that is the 10-year. And the 10-year is the global reserve asset it's the global reserve asset. It's a 10-year US Treasury. And that rate basically is what all of other things key off of. Credit cards, personal loans, HELOCs, mortgages, auto loans, they all key off of that 10-year. And so that is the rate that they need to keep under control to not kill the consumer. So even if there's inflation, that rate needs to be kept at a level that doesn't crush the consumer. If this 10-year goes from 4% to 6 or 7%, it's game over for the US consumer. They know they can't allow that. But they also know that if they let inflation run hot, this rate will naturally go up, because you've got bond investors are saying, I need to be compensated more, because if inflation is now, if we expect inflation to be 7, 9, 10, 12, 15% in the future, I can't accept 4.5% for this rate. I need 6%, or I need 7%. And so they've got to make sure they keep a lid on that in order to make sure that the borrowing doesn't get out of control. Because if you have two things happen: the consumer gets crushed, and then the interest on your debt gets out of control, because now you've got a problem here where you're not paying $1 trillion of interest, you're paying $1.5 or $2 trillion or $3 trillion on interest. It just spirals out of control, which is what Brandon was saying. They can't let that penny get closer to the bottom of the bowl. They got to tilt the bowl back up and get it back up here, slow it down a little bit. How do you slow that down? Inflation. And you just allow it to keep circling the bowl. Keep circling the bowl. And at the same time, it crushes the smaller income people.
Brendan, I'm curious if you have any other questions, if you have anything you wanted to tag in there. I know this was something you were touching on with James, I think last week.
Yeah, no, it's an incredible. I mean, this is the game right here. You know, this is the game. I remember Howard Dean, I think it was like 20 years ago in the United States. You know, one of the mainstream legacy news shows. He said himself, he's like, yeah, we have to tax people enough, and you know, inflate enough basically to get what the government needs and to redistribute things the way we see, but not enough where the people recognize what's going on. I mean, the quiet part, that's what we were talking about earlier, like hiding in plain sight. We have to get good at reading between the lines and understanding these things are hidden in plain sight, and it's there for everyone to see if you're willing to do the work. And we have some great comments in the chat and stuff like that. And it is a good old boys club, and that's what it is. All of these things are good old boys clubs. And that's what the politics is part of all that. So humans are human, and politics is just part of all that in every sector of society, whether it's in sports. And growing up in sports, James and I obviously played hockey at very high levels. Politics is part of everything. It's part of Bitcoin. It's part of sports. It's in politics itself, right? Like, we are human. So if we don't understand that and start, voicing our opinions and what's actually happening and standing up, then we are complicit into what is going on. And that's why we're here. I mean, that's why I didn't eat family or dinner tonight. That's why Ben's here not eating family dinner. That's why James is taking a break from what he's doing. It's because we're called to do this and to alert people to what is going on. That's why people are here in the chat, for crying out loud, and commenting and putting their two sats in and asking questions, because we know something is wrong. We've known something is wrong. And this is why we're here, to change us and alert people that hopefully there isn't a good old boys club to the extent of it's in the money system. Hopefully we can have something there where there's rules and not as many rulers, and being a part of something that we can shift to help it equalize the system a bit.
Yeah, there's a measure. That's a really good point, Brandon. There's a measure that shows, and I just shared another chart. I'm just share all day here, Ben. But there's a measure here that shows, this is the white line here is what is calculated as the neutral rate. What Holston, Labick, Williams, it's a calculation that determines what they think the neutral rate is. What is the neutral rate? Where if Fed funds was at that rate, then it would not be restrictive and it would not be expansionary. It would be right on target. So it wouldn't impact the economy either way. If you look at the neutral rate over the past, just call it 25 years, look at how often it has, the Fed funds rate has been under the neutral rate, meaning it's been expansionary all this time in the early 2000s. And then it got up there just a little bit, just for a little bit in 2007. And then it dropped and stayed under. Look at how long it's been under the neutral rate, meaning it's been expansionary all this time. And what do you think happened with assets and the S&P and gold? And then, of course, Bitcoin was born in here. Great timing for Bitcoin to be born, because this is expansionary, meaning that the U.S. money supply, basically, in debt and leverage, expanded this whole time, all the way through here. And now it's been above this neutral rate now for a little while here, for about 2 years. And it's time for them to bring this back down. And they know they've got to bring this back down, because otherwise they're going to drive it into the economy into the toilet. And so that's, into the gutter. And they don't want to do that. They know they really can't do that. So look at how often they've allowed it. Where do you think rates are going to go now? Of course they're going to go lower. They're going to go lower soon. And if the Fed doesn't lower them soon, they're at risk of a massive policy error. So they got to pull them down quickly here. In my opinion, they're going to come down over 1% in the next, 6 months at least.
Interesting. All right. I've got one other line of thought that I want to go down with you guys, and it's in regards to kicking the can down the road and tactics that the U.S. can employ to do that. Because I mean, I don't know about you guys, but I don't believe that in the ultra long run, Bitcoin and the dollar can peacefully coexist. I think that I think that the dollar can definitely exist for an extended period of time. I think, you know, some of the smaller currencies are going to be in trouble. But I do have some questions in and around some tactics around that. And we actually had a clip that came up, if I'm not mistaken, it was about a week, just over a week ago. And it was Russia talking about what the US may be trying to do with its debt in regards to well, they refer to it as crypto, but they're talking about stable coins and other things. I'm going to touch on that in a sec. We've got one last little break that we're going to take, and we're going to come back and get our thoughts on this to round it out. So I'm very interested to hear your thoughts. I'll play the clip. It is in Russian, but we'll just mute it and we'll take a look at what the individual had to say. So we'll see you guys in one sec. Be right back. Looking for a simple and secure way to manage your Bitcoin on mobile? AQUA Wallet has you covered. It's user-friendly and puts you in full control of your Bitcoin with secure self-custody. AQUA also supports Lightning and Liquid Network, making fast, cheap Bitcoin payments and asset transfers easier than ever. Plus, it even supports stablecoins, giving you ultimate flexibility. Built on open source code, AQUA is transparent, trustworthy, and perfect for beginner and pros alike. Ready to upgrade your Bitcoin experience? Click the link in the show notes or scan the QR code on the screen now to download AQUA Wallet today. Securing your Bitcoin doesn't have to be complicated or invasive. With NUNCHUK's HONEYBADGER plan, you get state-of-the-art multisig with built-in inheritance planning and no KYC required. NUNCHUK is trusted by users to secure billions of dollars in Bitcoin. The HONEYBADGER plan offers 204 assisted multisig, guiding you step-by-step on mobile or desktop. It works seamlessly with hardware wallets like TapSigner, ColdCard, Jade, and plenty of others, so you're always in control. Plus, with non-KYC inheritance planning, you can ensure your Bitcoin goes to your loved ones. No private info needed. Take control of your Bitcoin today. Click the link in the show notes or scan the QR code on the screen to check out the HONEYBADGER plan. CoinKite has been in the game for years, creating hands down the best and most secure hardware when it comes to securing your Bitcoin. The ColdCard Q is an absolute powerhouse and my daily driver, and it's ideal for newcomers and advanced users alike. The TapSigner gives you a low-cost, user-friendly option for those just getting started or for convenience when traveling. You can head to coinkite.com and use code BTCSessions for discounts, or simply scan the QR code on the screen to get started right away. All right back in. I want to play this clip. This is out of Russia, September 6th. So yeah, about 10 days ago. But they're chatting about how they believe the U.S. plans to handle its debt situation. And I'll kind of, it's muted, but it says the U.S. is now trying to rewrite the rules of gold and cryptocurrency, or with gold and cryptocurrency markets. Remember the size of their debt, 35 trillion. That's 37 now. But these two sectors, crypto and gold, are essentially alternatives to traditional global finance. Washington's actions in this area highlight its main goals, and those are to urgently address the declining trust in the dollar. As in the 30s and the 70s, the U.S. plans to solve its financial problems at the world's expense. This time by pushing everyone into the crypto cloud. I hate that terminology. Over time, once part of the U.S. national debt is placed in stablecoins, Washington will devalue that debt. Put simply, they have 35 trillion currency debt. They'll move it into the crypto cloud, devalue it, and start from scratch. And yeah, that's the reality for those enthusiastic about crypto. Now, I'm curious, again, the terminology there, pretty bad, but overall, I'm wondering if this stablecoin play, this Genius Act, this, having well-regulated and approved stablecoin issuers that, one, not only make US dollars accessible to pretty much everyone on a global scale. So if you have a crap local currency, you can utilize it as an individual, as a business, as whatever, as a reserve asset potentially. Does that help them? And furthermore, the stablecoin issues, what do they do when they get the actual dollars? They buy treasuries. So is this a play? Is this a kick the can down the road moment?
Look, I was in Washington a little over a year and a half ago, and we were talking to congressional aides and congressmen, senators, Senate aides about Bitcoin and cryptocurrencies, and just trying to educate them a little bit about, what they are and why they're so important. And we got into one of my local senators' offices, and the aide was like, "Oh yeah, we met with Tether. We know how important this is. We understand how critical it is for us to embrace stablecoins because of the U.S. Treasury." So they got it. This is a long time ago, and they already get it. So what does a Genius bill do? Well, it allows for stablecoins to be issued by these major banks under strict rules and regulations of the government, with very strict audit capability and all that. So no longer do you have Tethers just saying, "Well, we buy what we buy, just trust us." It's going to be like Circle, with Circle's like the gold standard for the audit of the underlying holdings of these stablecoins. But what are they? For the listeners who don't know, a stablecoin is it's a cryptocurrency that is pegged to something, anything. It could be pegged to gold, it could be pegged to copper, it could be pegged to rupee, whatever you want. But by and large, the vast majority of them are pegged to dollars, US dollars. And so why is this important? Well, it's important because exactly what you said, Ben, is that you can have access to an exchange that offers stable coins, Tether or Circle or something else, a USDC or something else, but if it's pegged to the US dollar, then you can effectively get dollars without actually having dollars, because it's pegged to it. It's pegged to the US dollar. So now if you want to hold your money in dollars rather than your local currency, if you're in Venezuela or Argentina or Egypt or somewhere where you have a very high inflation, then you can hold it there and be pegged to the dollar and kind of protect your hard-earned money, currency, whatever, assets. Now, of course, we know the dollar is debasing, so it's not great, but it's debasing at a lower rate than most everything else. Then what do the stablecoin issuers do? They turn around and take that currency that they've been, that's been subscribed or bought with. They create the stable coin, and they go and buy US dollars and US treasuries. And so what the point of all of it is that it allows the US Treasury to find pockets of liquidity for treasuries, for US Treasury sales that they didn't have before. And there's a billion people across the world who are unbanked. If they're able to go and buy US dollars, then they're effectively pushing them into US Treasuries. It's another avenue to get people to buy treasuries. So was that Russian minister wrong about the US pushing treasuries into the cloud and just revalue them? Yeah, they're not doing that. But what they are doing is they're finding pockets of liquidity to continue the charade that we've been talking about, which is debasing the US dollar with inflation and finding people who will buy it because it's inflating at a lower rate than other people's currencies. It's effectively sucking the currency from foreign fiat creators, and it's just the playbook that Brent Johnson had laid out years and years ago with the dollar milkshake theory. And they're just using a long straw and sucking currency. They're sucking the money out of other fiats, and it's just going to end up in the dollar and end up in US Treasuries. And that's kind of the playbook.
Brandon, I'll let you chime in if you have anything.
Yeah, just real quick. I mean, James laid it out really well. It's number one, you look at what and again, it's the US's enemies, so again, who's to say who your enemies and who your friends are in this world? But again, when it's, you know, Russia or China or whatever, I mean, look what they're doing, and I'll throw it to the altcoin stuff or you know, anything else out there. It's like, are they talking about, you know, some altcoin? No, they're talking about Bitcoin. They've been talking about Bitcoin for years now. That's what they are focused on. So if you want to know where the signal is, look at what the people that want to take you down, at least, you know, quote unquote, are doing. That also will help you find some signal within noise. So I want to mention that really quick. But also, you know, we're talking about the CIA, you know, creating Bitcoin. A lot of people are like, oh, the CIA created Bitcoin, the government created Bitcoin and stuff like that. It's just there to absorb the liquidity, so there's not like the shock in the market. And people, it's like, you'd think you want to be in on that trade then, right? Like if the CIA created, you'd think you'd want some of that. So you're there to ride the wave as it's absorbing all the liquidity over the next 10 or 20 years, whether they created it or not. And that's the beauty of it. And oh, by the way, they can't control it. So the argument falls apart somewhere because no one can control it. CIA created it. It's there to absorb the liquidity and to be this like fail safe, you know, like so you're going down the mountain in a truck and it's like the ramp that you have to go off on to like save yourself. And that's their escape valve, and they created it. And it's like, okay, so it's there for you to take, but you're not going to take it. And then at the same time, they can't control it. So again, just some things to note. James hit the nail on the head when it comes to some of the specifics, but I just wanted to mention some of those other things out there, those extraneous things that are kind of attached to this this whole argument.
Yeah, remember how stupid we were back when Russia invaded Ukraine, and we turned around and we seized their assets. We seized their U.S. treasuries and we kicked them off SWIFT. What do you think Russia wants to do? And that's when you hear people talk about BRICS and creating their own currency, they're not going to be able to create their own currency. But what they're going to do is get away from the US dollar and US Treasury. Who wants to own US Treasuries when the government, in a monumentally stupid mistake, like this is categorically catastrophic for the US Treasury for them to do this, because they just signaled to the world that, hey, if we don't like what you do, we're gonna seize the treasuries that you have and we're gonna kick you off SWIFT. And then the Treasury's sitting there going, wait, we need them to buy the treasuries. Like we need buyers of treasuries, or we can't facilitate this idiocy out of Congress of this endless spending, which is the whole point of the Treasury. They're there to facilitate the idiocy. Congress is there to get reelected, so just spend as much money as they need to. And then you've got Biden that turns around and cuts them off the SWIFT network, takes their treasuries, and everybody around the world who is not a very close ally of the U.S. government is saying, oh, shit, I don't think I want to own these treasuries. So they're looking for pockets of where to, like, so they're buying gold. You know, it's not the U.S. playing with it. That's exactly what's happened. So we paint ourselves into this corner very, very eloquently. I mean, I couldn't have come up scripted a better way to do it. Like, how stupid was that? So, and here we are.
Now, I did want to touch on one other thing in the stablecoin vein. And yes, we're talking about stablecoins. People deposit dollars with the issuers, and then the issuers give them the pegged tokens that they can then use freely. And then the issuers will go and buy treasuries. Well, the treasuries have a coupon, of course. And then they are paid the corresponding interest rate. The interesting thing is what somebody like Tether is doing with the proceeds. They're buying Bitcoin and they're building a Bitcoin treasury. Now,
that has nothing to do with the actual pegged stablecoin. That has to do with their own treasury for their company, exactly. With a few hundred employees making billions of dollars a year. It's mind blowing how like the per capita revenue of that company is mind blowing. But yeah, go ahead.
So this again, I tend to look at the stablecoin play as a kick the can down the road moment. But correspondingly, could it also be an accelerationist moment in that the people that are buying the treasuries are mostly excited about the coupon that they can then stack sats with?
Well, okay, stablecoins, the bill prevents the stablecoin issuers from passing on the interest to the buyers.
Well, not to the buyers, but to the as an entity.
Sure, of course, yeah. That makes perfect sense for them to do that. And they are doing it. I haven't spoken to Circle management, but of course they're looking for ways to maximize their own treasury, and that would make sense to me, and I would expect that to happen over time. But it is worth noting that these banks, it's insidious that they backdoored this, regulation into the Genius Act, where they're not allowed to pay out interest on these pegged stable coins.
Yeah.
Wow. Why? Because they're worried it's going to hurt the deposits and, in their banking system, and that'll hurt their ratios. And so they can't have that. So they don't want to. So now they've got a way to issue stable coins and turn around and reap the profits themselves, instead of passing them on to the consumers that are actually buying and taking the risk of those treasuries by having a stable coin.
Mm-hmm.
So
is it, would you guys, I mean, either one of you, is it similar to what Saylor's doing in the sense of just the flywheel, like what, I don't know the arbitrage. I don't know, like whatever coupon the rate they're getting versus buying the Bitcoin, whatever. But I mean, it's similar-ish in a way, I would imagine, to what Saylor's doing, right? It's a flywheel how does it end? Where does it stop? I guess what Tether's doing, to your point, Ben, of like, they just keep, you're just, okay, I'm taking this fiat and I'm just now putting it back into Bitcoin, and then I'm just repeating the process.
Yeah, they're arbitraging it. Yeah, for sure, they're arbitraging. It's just a question of how much. We don't get to audit Tether, so we don't know how much. We can hear what they say, but we don't know for sure. So
well, so what they've got their operating budget, whatever that may be, but then they're basically saying, okay, give us your dollars, we'll give you the token that we create, you can redeem it later, but in the meantime, we're going to buy some treasuries and we're going to get the interest from that. We're going to stack Bitcoin. I mean, that sounds like a pretty good deal.
Makes perfect sense to me.
Not bad.
I wouldn't mind people.
You would have thought of that, boys.
Yeah, well, I wouldn't mind people stacking billions of dollars in a bank account for me while I, get whatever the interest rate on those treasuries are, and just use those billions of dollars to just buy Bitcoin.
Don't forget the Tether was a key part of the launch of 21. Jack Mallers' company with CEP, with Cantor Fitzgerald. So they know, they're very well aware of the power of the Bitcoin treasury play. So
yeah,
interesting. All right, gents, final kind of thoughts from you guys. If we were to teleport a year into the future, we're all reconvening, kind of reflecting on the past year. What is one thing that you feel relatively confident will have transpired in the prior 12 months that would be very notable to chat about?
Go ahead, Brandon.
Boy, that's a good question. I mean, I think the price will be a lot higher. I think we're on the precipice. It's gone up, double since Trump got elected. I think it's going to be higher. I think it's going to be much higher. I think we're at the precipice. If we talk about the rate cuts, there's a lot going on in the world that there's the buy the rumor, sell the news aspect of things, right? But at the same time, a lot of these announcements, a lot of these things that have happened, they haven't actually taken place. A lot of the things haven't actually transpired yet, meaning, hey, we're selling our fiat and we're actually taking it and buying Bitcoin out of the market with it, and prices made at the margin. So there's a lot of things that have to happen still. Retail is completely asleep. I think there will be a retail push at some point again. People waking up, because again, as we outlined here, and you guys said this, beautifully during the episode today. I mean, whether it's people going and buying meat at the grocery store or whatever it is, people are feeling it everywhere. So something has to give at some point, and Bitcoin will be that, like we said earlier as well, that escape valve, that thing that people are going to realize as more of us are opening our mouth about it. Hey, there's this thing over here that doesn't steal from you. what's the saying of, you know, the invention that its time has come, right? It's there, and then the people start seeing it. You know, the teacher doesn't appear until the student's ready, type of thing, right? Like that's coming, and that's here, and we have the power of social media, what we're doing here, that's going to happen. So I think price will be much higher, and I feel very confident. I mean, you look at all the people in the space, all the announcements we had, but just the people in the space, you know, James, obviously himself, Gary, you know, Leland is supposed to be on today, the Jeff Booths of the world, you know, Larry Lepard, all these people that have, they've lived so much life already, and the wisdom they have, and then humility to actually see, hey, this is a better way. I think those are the true signal in the noise. People that have lived 50, 60 years or more, you know, maybe say 40, 45 years, 50 years or more, and they can say, hey, I'm humbling myself and realizing there is something better here, actually. Again, just like we talked about the social aspect of people discounting how much printing there will be because of the social aspect of keeping up the Joneses and making sure I don't look like a fool, we can't discount that signal in all the noise of the world as well. There are people out there that are incredibly smart that have lived a lot of life and said, wow, there's something better here. After everything I've experienced and learned in my life, that is true signal, true signal. So to me, I think we're just on the precipice of massive, you know, again, coming back now full circle to the circle, and we're hitting that drain part. And as James said, we have to, which is a great analogy, you have to, like, they're gonna have to lift up this thing to get it back out of that. And that means massive currency printing, financial repression. You better own assets. Bitcoin is going to be the fastest horse in the race because it's the finite one out of everything. But hey, get some assets. I guess more of the story, get something, because you're going to need it going forward.
My main takeaway from that is that I don't know whether to be I don't know whether to take it as a compliment or an insult that you included as somebody who just turned 40 as somebody old enough to have gained wisdom.
I'm 38, so I have to, I mean, like, I'm trying to finagle it
really
appropriately
skirting
here,
that
man.
line there, my friend.
No comment.
James,
man.
I'll toss it to you. A year from now, what's the story of the year? What's the interesting thing that has come to fruition that we can't get over from the past year?
So I think if you just look at a big lens, I think a year from now, U.S. debt's going to be over $40 trillion. We're going to be running deficits that are even larger than now, regardless of the lower interest rates. And I think that Bitcoin's going to continue to decouple from the market and not be correlated to anything. And that's going to be, to me, a really big story. And the reason will come out from whatever this next black swan event is. I've been doing this for so long that I've seen like 700-year events in my 30-year career. They seem to come every 5 to 7 years now. It's crazy. And so the next time we have another 100-year event, I think that Bitcoin's going to act in a way that people don't expect, just like it did in Silicon Valley meltdown. And so that decoupling is going to be important. And I do think that we're going to find all-time highs here this year. And you're going to have people who wish they had bought the dip. Now, that's 1 year from now. It's a long time for Bitcoin. And you could easily have a market drawdown where everything correlates to one, but the response will be violent from the Fed. And they will come at the market with an absolute money bazooka. And so it'll be very difficult to time. So that's what I expect on the other side of anything. So, but that's just kind of my base case.
Well, we'll have to do this again in a year then. Hopefully before then. But this has been fantastic. Gentlemen, I really appreciate both of you coming on, getting bullish with me on a Wednesday evening. Everybody that's been watching, thank you guys for being here, whether you're new to the channel or returning. Make sure you drop a like on the video. Make sure you go follow both James and Brandon. I've got their info in the show notes down below. And James, Brandon, have a wonderful rest of your evening. We'll see you.
Awesome to be here, Ben. Thank you for having us.
Cheers, guys.
See you, Brandon.
Thanks, Ben. Yep. Thanks, James. See you guys.
Hey, you
Yes, you watching the Bitcoin price movements and the latest exciting news. It's awesome to stay informed, but the real power of Bitcoin comes from taking control. Don't just watch, take action. Head over to btcsessions.ca/learn for free step-by-step tutorials that guide you through every major skill you need to know, plus full video playlists for deeper dives on any topic you like. And if you're ready for the ultimate fast track, scroll to the bottom and check out bitcoinmentor.io for premium one-on-one experience with my team of Bitcoin experts to ensure you get it right the first time. Don't wait. Secure your Bitcoin future today. Hit the link in the show notes or scan the QR code on the screen.